this is an exercise that I do with quite a few traders. It goes a little bit deeper into visualization and the psychology. Now, what I want you to do, okay, is I want you to just for a second pause, put your pen down, stop looking at the screen. You don't need to look at the screen, and just listen to me talk, okay? Now, I want you to close your eyes and I want you to picture yourself entering the S&P 500 or whatever market you trade, okay? Now, you're going to be entering this market and you're going to be buying this market at a level that you thought was perfect. In other words, you came in this morning, you planned this trade, you wanted to get in this price, the market's come down to that price, and you've entered and executed according to your plan. Now, instantly the market moves off sides. Okay, instantly you find yourself off sides. Never saw yourself go tick on side, instantly starts to move off sides. The market now continues to move lower and it's about to trade your stop. It's all happened very quick in a short space of time. Now, because the market has gone this far quite fast, you figure, well, something must be up. Maybe there's some news. Maybe there's just a large order that's stopping out. And the market will most likely bounce a few ticks and you can just minimize that loss a little bit. So you decide to pull the stop away. You completely pull the stop away. You don't put a new stop, you don't stay, you just pull the stop away. And instead you decide, I'm just going to manually exit this trade. I'm going to wait for it to come up a little bit, just minimize the stop a little bit, and then I'll get out. Almost instantly, the market is now below where you had that original stop. Suddenly, the market's now trading 2 times your original stop. And you just panic, you exit, you're emotional, you're frustrated, you bang the desk, and you just take the loss. Now what I want you to do is I want you just to open your eyes again. And what I want you to understand is that time and again, I do this exact same exercise with traders. Why? Because I have yet to meet a single trader that hasn't been in this situation in some shape or form. Now the question I have for you is, emotionally, after doing this exercise with me, after trying to visualize and put yourself into that scenario, how do you feel about taking double the loss when you could have just exited at the original stop? What feelings come to mind? What sensations come to mind? Okay, now, warranted, the more you do this, the more you practice this visualization, the better you'll get at understanding what emotions are being triggered. But I'm sure we can all agree that things like you feel pissed, you feel frustrated, irritated, you feel stupid, emotional, stressed, maybe you're tilting. Okay, you should be feeling any one of these or all of them, because the reality is you could have just stuck to the plan and got out, but instead you tried to be clever and the market punished you. Now, the simple question is this: how much more do you think you lose as a result of the above emotions? In other words, when you are emotional, when you do tilt, put yourself back into that scenario. What's your next trading decision likely to be? A good one or a bad one? When you're frustrated, what are you likely to do in that next decision? Okay? Moreover, how much does this feeling of frustration and emotion that comes from moving that stop, how much does that knock your confidence for that next trade? And how often do you typically end up spiraling towards more poor performances? Or maybe you don't run the next trade for its full target, or maybe you scratch the next trade because you're afraid. How often does just simply moving that stop have a spiraling effect towards making additional poor decisions? Now let's continue this exercise. Again, I want you to close your eyes. And again, you're going to enter your market. This time, you're buying at your level, exact same process. You're buying at that same level that you planned, and you enter the market. Again, instantly the market moves offside. Doesn't even give you a chance. Doesn't even allow you, to have some fun. Instantly offsides. Again, the market continues lower and it's about to trade your stop. Same scenario. This time, the market trades your stop. You don't move it. It just trades your stop. And it happens quick, like really, really fast. You step back and you recognize the price action in the market is very strong to the downside. You stay out and you just observe the market. Okay? Because clearly, if this was meant to be the perfect level that you had planned, why has the market just gone straight through it? Why has it not even put you one tick on side? Why has it not seen any kind of buying where you believe there should have been a lot of buying? Now I want you to open your eyes. What's the immediate feeling you're feeling right now? Okay, again, obviously, I know I'm talking this, I'm narrating it, I'm not giving you that much time to think about it, but you should all instinctively say, well, I feel a sense of relief. Okay, because the market kept going. I could have lost more, but I stuck to the plan. And I'm thankful that I just respected the stop and I stuck to the plan. I'm kind of happy. I'm almost happy it kept going and I stuck to the plan, because it meant that I got rewarded for being disciplined. And I didn't sit there maybe averaging. I didn't sit there maybe stuck in a bias. I didn't sit there all day buying the market when it very clearly just kept going down, 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 down. So my question to you then after this visualization technique is the following. Okay? What is a stop? A stop, let me get the screen back here. Oh, there we go. Okay. A stop is ultimately the point at which a trade is proven to be invalid. That's all a stop is, and that's the definition of a stop. You put a stop where the trade idea is invalidated. Okay? In other words, if the market gets to that point, it is telling you, trader, your idea is wrong. Now, why would you still want to be in a trade if the very thing you planned and thought about, which is the stop, it's now reached that point, the market said to you it's not valid, why would you still want to be in that trade? Okay? And the simple answer, and that's the reason most traders do it, is because they just want to save a few ticks. The reality is, and this is the key question, is at what cost? In other words, sure, sometimes it bounces. Many times it bounces. Many times it bounces and does what you think. Sure, I get that. But at what cost does that come? And that's the key of what you're seeing on your screen now, and that's what I'm going to go through. Because I'm going to show you that the costs far outweigh the benefits. And as a result of that, there will never be a good reason to move your stop again. So let's talk about, if you do accept the stop, what are the benefits? So let's say every single time you're the most disciplined trader, you never move a stop. What are the benefits? Well, first and foremost, it's the avoidable loss. In other words, in the instances where it does continue, okay, you're minimizing the losses you would have had to take by moving your stop. Okay, and we call this controlled losses. In other words, a controlled loss is nothing more than the costs we can avoid if we just stick to the damn plan. Okay, so the first benefit of sticking to your stop is you'll never take more than the loss you intended to take. Number two, when you accept your stops, right, what you're equally doing is you're never allowing yourself to become emotional, or you're never giving emotion to a situation that's in your control. Okay, we all agree that we felt some sense of an emotion when I took you through that visualization. Now eliminate that. And imagine you eliminate that once a week, 5 times a month, 60 times a year. How much energy are you saving? Okay? And what's the result of that energy being saved? In other words, how infrequently are you tilting or making poor decisions after making that first bad decision? Right? What about confidence? Well, the reality is, I don't know a single trader that doesn't change a stop, that gets hurt as a result of that, that's confident after that. I don't know one, and I've never met one. So how much of a price tag do you put on your confidence? Well, I put a very high price tag on my confidence. Why would I ever want to risk my confidence just to save a couple of ticks? Doesn't make sense. Okay. What about momentum? Something hopefully most of you have experienced or will experience, because momentum in trading is a fantastic thing. Okay, when you start to be consistent as a trader, everything you touch turns to gold. You start to size up more. You start to leverage more. Your account balance starts to go exponential. It's a fantastic state to be in. But you move that stop just once, and guess what? Bye-bye momentum. It's gone. It's gone instantaneously. Now, why would you risk all the benefits that come with momentum just to save a few ticks? It makes no sense. Okay, what about the spiral? I don't know a single trader that doesn't tilt, that doesn't make weak trading decisions after having moved a stop and being caught out. I don't know one. So why would you allow the spiral to happen in the first place? It makes no sense. What about bias avoidance? Again, remember, every single time you are in a market, so you moved your stop, the reality is you are still stuck in a bias. Right? There's no ways you can break that cycle of bias without exiting the trade. You'll keep buying it. And guess what? If the market keeps going lower quickly, you're going to keep justifying it by saying, well, it's gone too fast. It's going to bounce eventually. But the reality is all you're doing is feeding that bias. You're not objective. And that moves us to the next one. When you're in a trade, it's impossible to be 100% objective, right? Because you are stuck in continuous flow. In other words, if you decide to move that stop, you're not able and capable to take a step back and say, wow, that market got to my level very quick, got to my stop equally quickly, something must be out. You cannot be in that frame of mind because you're stuck in a continuous loop. So why would you move the stop? And finally, when you can be objective, when you can just accept the stop, take a step back, look and go, something's not right here, you effectively allow yourself to take advantage of new objective information, which means you can take advantage of the opportunity. But guess what? If you move your stop, you'll never be objective, and you can never see that opportunity because you're stuck in a subjective frame of mind. So why would you move a stop? It makes no sense. However, I need to be fair here. What are the advantages of moving a stop? Let's see. I minimize my loss. Because the reality is, a lot of you will say to me, well, if I move the stop, it might come back and then do what I think it does. But the reality is, most of you, after having seen the market do something irregular, are just going to be so relieved to see the market get back to your scratch entry that you're either going to take a scratch, or you're going to take a smaller loss, or you're going to take a very small winner. You will never justify the upside of moving a stop. And I've never met a trader that has done this yet. So my question for you is, where is the logic in moving a stop? Every one of you today should walk away and never move a stop again because it's irrational, right? I've just given you all the logic that comes with moving a stop versus not moving a stop. And I hope we can all agree that it's clearly irrational to move stops. It's illogical to move stops, and there is no upside benefit. The scale is very clearly tilted in the favor of accepting our stop and moving on to the next opportunity. A stop is an opportunity to start over again. So take advantage of your stops being triggered. My challenge to you, next time you move a stop, go through this visualization technique. Interpret the feelings that you experienced when you did it. Have a look at the raw cost. Write down that dollar amount that it cost you additionally for moving that stop. And say to yourself, on top of that, if I hadn't lost that additional money, how much money would I have made on that other trade I could have taken, I should have taken, and that did go to target? You do this enough times, and I promise you, you will never move a stop again in your career, and you will develop the edge. This is an edge. Okay, the ability to stick to a plan and allow your stops to be hit is an edge, and it's an edge most traders will never develop.